I want to get what your take on what your how you see the Apple and Google, or Alphabet, I should say, under quite a bit of pressure in the pre-market for two very different reasons, but in general, tech under pressure right now.
Well, it's going to be a difficult year in terms of lots of headline risk. Apple is a good example of that. Trade wars are a tough thing. This is one of China's retaliations. We would not get overly concerned about it. We think Apple is well positioned for the year. If the stock were to sell off anything more meaningfully, we would probably step in and start to add to that position. In terms of Google, they had a good but not great quarter. The market wanted great. The market is really emotionally charged and very momentum driven. Stock was up $5 before the release, then sold off significantly. We turned the sound down a little bit. The stock sells at 22 times earnings, has a very good outlook. We're very comfortable with their significant increase in capital expending because they don't have enough capacity for AI. So we think it's smart investing. 22 times earnings, we like the stock. We would buy anything under 190, we think is a good entry place for the stock. So don't get too caught up in the day-to-day volatility on these names.
All right, anything under 190 right now, the stock trading about 191.75. I want to get your word of the day. How do you see today shaping up?
The word of the day is guarded. It's going to be a tough year this year. We would be a little bit more cautious about the market. We would buy into any significant weakness. We would not chase the rallies.
So you're saying you don't want to chase the rallies right now. What do you think about some of the volatility that we're seeing related to the tariff and the trade war? Yesterday, we saw the markets moving higher on the thoughts that the president and the Chinese president would have some type of conversation about tariffs, and potentially we could see another one of those 30-day pauses. That didn't happen. President Trump says he's in no rush. Does that concern you about investing in this environment right now with that, potential for volatility?
No, we think you have to expect that volatility. This is going to be a complicated year as the administration implements a number of their programs. One thing that you can see clearly about Trump is he changes his mind. There's no predictability. So we think if you try to trade around it, you're going to lose your mind. We think you have to have a longer term perspective. We think ultimately the year is going to be okay, but not nearly as good as last year or the year before. If the market does 9%, that'd be terrific. And what that means is if the market's up 8%, don't chase that rally. When the market sells off because of trade concerns, we'd buy into that sort of weakness.
All right. With that in mind, David, what is your pick for us today?
Pick of the day is PayPal. They had a good but not great quarter yesterday. The market had some disappointments on certain things. They upped guidance. They beat the numbers, yet the stock sold off about 12%. We think if you look through the short-term noise, and there's a lot of short-term noise, they have a really good CEO. They have a turnaround plan that's working. Stock's at 15.8 times earnings. They're buying 8% of the stock back. All really good things. We think if you buy the stock on this significant sell-off, that by the end of the year, the stock easily could be $90 to $100. We think this is a great entry point.
We talk a lot about financials potentially being a safe harbor. A lot of banks have put out notes about that. Do you count this also? I know the stock's down about 8% year to date, but do you count this as a safe harbor and also a potential beneficiary of less regulation?
No, we wouldn't look at it that way. We look at it more as a technology company. So it is going to be volatile, but you're buying it at the lower end of its range. In terms of financials as a safe harbor, we've been on with you a lot over the last few years. We like financials. We've done very well with them. We are less enthusiastic about them now. We think they'll do fine. Fundamentals are good, less regulation, very good. But in a volatile stock market environment, they do tend to be volatile. So we like our financials. We don't think you want to jump in both feet with new money and financials right here. But we do think they're going to have a fine year.